Hi, I'm Jason, founder of Cover6 Financial. I started this firm to make Medicare clear and practical for real people. This series is 100% educational, no sales pressure, no spin. If you're turning 65 or helping a loved one, you've probably noticed there are a lot of moving parts. My goal is to give you straight answers so you can make confident decisions. We'll cover Medicare Parts A, B, D, Medicare Advantage, and Medicare Supplements, and then a side-by-side comparison so you can see which path might fit you best. Most people first qualify at 65 years old. If you're already on Social Security, you're typically auto-enrolled in Parts A and B. If not, you'll enroll through Social Security during your initial enrollment period. That's 7 months total, 3 before your birth month, then your birthday month, then 3 months after. Enrolling early helps ensure your coverage starts on time and avoids penalties. If you're still working or covered under a spouse's active employer plan, you may be able to delay Part B without penalty if that coverage is considered credible. When that coverage ends, you'll qualify for a special enrollment period. Important to note, different products have different special enrollment period timelines. To keep it simple and safe, plan on a minimum 70-day window to act after losing credible coverage. Some options like drug plans and advantage plans have shorter clocks and specific effective date rules, so don't wait. Start your enrollment steps immediately and confirm your exact deadlines with the Social Security office. When you enroll, you've got 3 paths. You can enroll in just original Medicare A and B, which I don't recommend because it leaves huge gaps. You can enroll in A and B and include a Medicare supplement to help pay those gaps. Or you can enroll in an Advantage plan, which is an all-in-one option managed by a private insurer. We'll break down costs, coverage, pros and cons for each of the options in upcoming videos. You're in the right place. Next up, we'll dig into Medicare Part A, the hospital benefit, so you can see exactly what it covers and how the benefit period works. Welcome back. In this segment, we're looking at Medicare Part A, your hospital insurance. If you've worked and paid Medicare taxes for 10 years, you've already earned this benefit. Let's talk about what it covers and what it costs and how it works. Part A covers your inpatient care. That means when you're formally admitted to the hospital, it also covers skilled nursing facility care, hospice care, and some limited home health services. That includes your semi-private room, meals, nursing care, and any drugs or supplies you receive during an inpatient stay. What it does not cover are your doctor services. Those fall under Part B. Most people don't pay a premium for Part A. That's already covered through your payroll taxes. But there is a deductible for each benefit period before Medicare starts paying. Here's how that benefit period works. It starts the day you're admitted as an inpatient and ends after you've been out of the hospital or skilled nursing facility for 60 days in a row. If you're readmitted after those 60 days, a new benefit period begins and you owe the deductible again. For example, if you're hospitalized in January and again in April, those are 2 separate benefit periods, so 2 deductibles must be paid. If you pair original Medicare with a Medicare supplement plan, that plan can cover these out-of-pocket costs, including the Part A deductible and daily coinsurance if your hospital stays run long or you need extended skilled nursing care. It's one reason people choose supplements to have those predictable costs. After your deductible, you're covered for up to 60 days with no daily charge. From 61 to 90, you pay a daily coinsurance. Beyond 90, you use your lifetime reserve. You get 60 in your entire lifetime, and after that, you're responsible for all the costs. For skilled nursing care, like rehab after surgery, Part A covers the first 20 days in full as long as you were hospitalized for at least 3 days first. Days 21 through 100 have a coinsurance. Beyond that, you pay the full cost. Part A covers hospice care for those with a terminal illness and some home health services if you're homebound and need skilled care. It doesn't cover 24-hour custodial care like help with bathing or meals. In our next segment, we'll move to Medicare Part B, your medical coverage, and see how it works together with Part A to provide complete protection. Welcome back. In our last segment, we covered Part A, your hospital insurance. Now let's look at Part B, the part that generally covers everything else: doctor visits, tests, treatments, outpatient services. If Part A pays for your room and board when you're admitted, Part B covers the medical services. That's the doctors, labs, imaging, preventive care, outpatient procedures, durable medical equipment, even certain medications administered in a clinic setting. To put it simply, Part B covers the professional side of your healthcare, the people and services providing the care, whether that's in a clinic, your doctor's office, or even while you're in the hospital. Unlike Part A, Part B comes with a monthly premium. For 2025, Medicare sets a standard premium each year, and higher income earners may pay more under something called IRMA, the Income-Related Monthly Adjustment Amount. Here's how the cost sharing works. Once you've met your annual Part B deductible, you and Uncle Sam are basically partners. Medicare pays 80% of your approved healthcare costs, and you're responsible for the other 20%. There's no limit to that 20%, no maximum or out-of-pocket cap. So if you have a $100 office visit, Medicare pays $80 and you pay $20. Now imagine that across a year of specialists, tests, or therapies. Those 20% shares add up fast. That's where a Medicare Supplement plan comes in. If you pair it with Original Medicare, the supplement can cover that 20% coinsurance for you. And depending on the plan, it may also cover your Part B deductible. In other words, it turns an unlimited 20% liability into a predictable monthly premium. Be careful about when you enroll. If you delay Part B and don't have credible coverage through your employer or through a spouse's, Medicare adds a permanent late enrollment penalty, 10% for every 12 months you went without it, and that penalty stays with you for life. On the positive side, Part B includes a long list of preventive services, screenings, flu shots, annual wellness visits, all covered in full because Medicare wants you to stay healthy and catch problems early. Next, we'll move to Part D, your prescription drug coverage. I'll walk you through how it works, what to watch for each year, and how to avoid those nasty late enrollment penalties there too. In this segment, we're diving into Medicare Part D, your prescription drug coverage. This is the part of Medicare that helps you pay for your medications, both generic and brand name. Part D plans are provided by private insurance companies that contract with Medicare. You can get a standalone Part D plan if you have Original Medicare, or a built-in drug benefit if you're enrolled in Medicare Advantage plan that includes prescriptions. Each plan has a list of covered medications called a formulary. Drugs are grouped into tiers: generics at the lower end, brand names and specialty medications at the higher end. The higher the tier, the higher your share of the cost. Every plan has 3 cost-sharing phases. Let's simplify them. Phase 1, deductible. Some plans have a small deductible. You pay 100% of your drug cost until you reach it. Phase 2, initial coverage. Once the deductible is met, you and your plan share the cost. You'll pay a copay or a coinsurance while your plan pays the rest. Generally, the cost of drugs in this phase is reduced by approximately 60%. Phase 3 is catastrophic coverage. Once your out-of-pocket spending reaches $2,000 for the year in 2025, you're done. You'll pay nothing for covered medications for the rest of the year. Most plans have preferred pharmacy networks. You'll often pay less at a preferred pharmacy or through mail order service. For people on routine maintenance drugs, that convenience can save both money and time. If you go without credible prescription coverage when you're first eligible and try to join Part D at a later time, Medicare adds a permanent penalty to your premium for every month you went uncovered. It's not large, but it never disappears. Enroll on time, and it's the easiest way to avoid the penalty. If you already have prescription drug coverage through an employer, the VA, TRICARE, or retiree plan, that may already count as credible coverage. Just make sure you get it and keep that notice every year. Since plans change their premiums, formularies, and pharmacy networks every year, review your coverage during Medicare open enrollment periods, October 15th through December 7th. That's your yearly opportunity to make sure your plan still matches your prescriptions and your budget. Next, we'll explore Medicare Advantage, also called Part C, and see how it combines your hospital, medical, and often prescription drug coverage into a single plan. In this segment, we're talking about Medicare Advantage, also referred to as Part C. This is where private insurance companies contract with Medicare to bundle your coverage into a single plan. A Medicare Advantage plan replaces original Medicare Parts A and B with a single plan that usually includes prescription drug coverage as well. Think of it as a private version of Medicare that operates under Medicare's rules. These plans combine your hospital coverage from Part A, your medical coverage from Part B, and often your prescription drug coverage from Part D. Many also include extras like dental, vision, hearing, gym memberships, and flexible spending cards for certain expenses. Now, instead of Medicare paying your medical bills directly, Medicare pays a private insurance company to manage your care. That company handles your network, your claims, customer service, all of it. You still have the same Medicare rights and protections, you're just receiving them through a private insurer. There are different types of Advantage plans. Most people choose either an HMO or PPO. HMOs usually require you to use in-network doctors and have a primary care physician. PPOs give you more flexibility to see specialists without a referral and may cover some out-of-network care. One reason people like Advantage plans is the low monthly premium, sometimes even $0. Instead of paying a deductible and 20% every bill, like with original Medicare, you'll pay set copays for each service, maybe $10 for a doctor's visit or $40 for a specialist, or a set amount for each hospital stay. Each plan also has a maximum out-of-pocket limit called a MOOP. Once you hit that limit for the year, the plan pays 100% of all remaining costs. Because these are private plans, you have to use the plan network doctors and hospitals for the best rates. If you travel frequently or spend part of the year in another state, that's something to think about. Original Medicare works nationwide. Advantage plans are more local. Most Advantage plans include prescription coverage built in. The same Part D rules apply. Formulary tiers, preferred pharmacies, and the $2,000 out-of-pocket maximum for 2025. Advantage plans can offer benefits original Medicare doesn't, like routine dental care, glasses, hearing aids, transportation, and fitness memberships. Those extras are nice bonuses, but they should never be the main reason you choose a plan. The real question is always, does the plan, network, and coverage fit your medical needs? Because these plans are managed care, they come with trade-offs, like prior authorization for certain treatments, limited doctor networks, and region-specific availability. It's not a bad thing, it's just a different way of managing care compared to original Medicare with a supplement. You can enroll in a Medicare Advantage plan when you first join Medicare. And after that, during the annual election period each year from October 15th to December 7th. If you already have an Advantage plan, you can make a one-time change between January 1st and March 31st during the Advantage open enrollment period. Next, we'll look at Medicare supplements, how they work alongside original Medicare, and how they compare to Advantage plans in terms of cost, flexibility, and protection from unexpected bills. In this segment, we're looking at Medicare supplements, also called Medigap plans. If you prefer original Medicare and want to limit your out-of-pocket costs, this is how you do it. A Medicare supplement plan works with original Medicare. It does not replace it. Medicare pays its share first, and then your supplement plan pays its portion of the remaining costs, like deductibles, copays, and coinsurance. Depending on the plan you choose, a Medigap policy can cover the Part A deductible, the 20% coinsurance under Part B, and even extra charges from doctors who don't accept Medicare's standard rates. Some plans also include limited foreign travel emergency coverage. All Medicare supplement plans are standardized by the federal government, meaning Plan G from one company covers exactly the same as a Plan G from another. The only difference is the monthly premium you might pay. Today, Plan G is the most popular option for new enrollees. It covers everything except the annual Part B deductible. There's also a high deductible version of Plan G with a much lower premium, but a larger deductible you must meet before coverage kicks in. Depending on where you live and your age, a standard Plan G in Texas will run about $130 to $175 per month, depending on qualifying discounts at age 65. For folks older than 65, you can expect a slightly higher rate. The high deductible version is usually closer to $50 to $70 a month, starting at age 65. Remember, these plans replace your unlimited 20% exposure with a predictable monthly cost. There is no network. You can see any doctor or specialist anywhere in the United States who accepts Medicare. When you get care, Medicare pays its share first, then your supplement plan actually pays the rest. No separate claims or copays at the office. What these plans don't cover are prescription drugs. You'll need a Part D plan for that, or extras like dental, vision, hearing aids, or long-term care. They're strictly designed to fill the gaps in original Medicare. When you first enroll in Part B, you have a 6-month Medigap open enrollment window. During that time, you can choose any supplement plan without medical underwriting. You can't be denied for health reasons. After that window closes, you can apply later, but may have to answer health questions to be approved. The advantages are clear: freedom to choose providers anywhere, predictable costs, and simple billing. The trade-offs are a monthly premium and fewer extra benefits than some Advantage plans. You're buying simplicity and control, not bells and whistles. If you like the idea of low monthly premiums and don't mind networks or copays, the Advantage might be a great fit. If you'd rather pay a steady premium for full freedom and minimal surprises, a supplement plan might make more sense. We'll compare them side by side in the next segment. In our final segment, we'll put Medicare supplements and Medicare Advantage plans side by side to help you see the key differences and decide which path fits you best. We've walked through all the main parts of Medicare: Parts A, B, D, Advantage, and Supplements. Now let's put it all together and compare the two most common paths people choose: Original Medicare with a supplement or Medicare Advantage. Both options are legitimate Medicare coverage. The best fit depends on how you prefer to manage your health care. Freedom and predictability versus structure and affordability. Under Original Medicare with a supplement, Medicare pays first, and your supplement fills the gaps. You can see any doctor in the United States who accepts Medicare. With Medicare Advantage, you're enrolled in a private plan that bundles your hospital, medical, and often drug coverage together and operates within a network. Supplements typically have higher monthly premium, but very little out-of-pocket costs when you use care. Advantage plans often have low or even $0 premiums, but you'll pay copays and coinsurance each time you get care. Here's a good way to think about it. In a good year, when you're just seeing your doctor for an annual physical or routine checkups, an Advantage plan may save you a lot of money. But in a not so good year, say you need surgery or you're hospitalized, a supplement can save you thousands because it covers nearly all of those unexpected bills. Here's something many people don't realize until they're in it. Advantage plans are managed care. That means your insurance carrier can require things like step therapy, trying lower cost treatments before approving more expensive ones, or prior authorizations before certain procedures. That can sometimes delay care or add extra steps. With a supplement, those decisions don't come from a private insurer. You and your doctor decide, and Medicare simply pays its share. Under Advantage, the plan itself is the decision maker for many services. Most do a good job, but some people find that process to be a little frustrating, especially when they need care quickly. With a supplement, you rarely face those types of delays. If you travel or split time between states, supplements work nationwide. Any Medicare provider is in network. Advantage plans tend to be regional, so you'll want to make sure your doctors and hospitals are included before you enroll. Advantage plans protect you with a maximum out-of-pocket limit each year. Once you hit that cap, the plan pays 100% of covered costs. With supplements, you're already protected because your monthly premium, essentially, prepays your exposure. One big difference people don't hear about early on is that you can always get an Advantage plan, but you can't always get a supplement. When you first enroll in Part B, you have a 6-month guaranteed issue window where you can choose any supplement without having to answer medical questions. After that, if you try to switch or apply later, you may have to go through underwriting and could be denied based on your health conditions or items such as height-weight combinations. Advantage plans often include extras like dental, vision, hearing, gym benefits, where supplements don't. They're focused on core medical coverage and financial protection. Here's the bottom line. Supplements offer freedom to see any doctor and predictable costs in exchange for a monthly premium. Advantage plans offer low premiums and added benefits, but with managed networks and rules for how care is delivered. Neither is right or wrong. It's just a matter of which set of trade-offs you're more comfortable accepting. Here's my advice. Take the time to understand how each option works before you decide. What feels like a small difference today can be a huge difference later on, especially when your health changes. Whether you value freedom or simplicity, the goal is to make a choice you won't regret down the road. If you'd like help understanding which path fits your situation, you can reach us anytime at cover6financial.com, or you can email info@cover6financial. We're here to help you make confident, informed decision about your Medicare coverage.